And now Nigeria's equities market opened the new week on a positive note, starting the week on a bullish note while increasing its market value by 76 billion naira to its market value, reflecting a rise of 0.21%. The all-share index added about 138.63 points to close at 65,336.71 basis point there, while the market capitalization settled at 35.55 trillion naira. Similarly, the year to date, that is to say how the market has performed year to date, stand at 27.1%. Financial services industry as at yesterday, measured by volume, maintained its dominance on the activities chart with about 1.92 billion units of shares, which was valued at 16.5 billion, which traded in about 17,689 deals at the close of Monday's trading section. So let's get talking now. Isaac Anyalisi, stockbroker and investment analyst, he joins us now virtually. Thank you for joining us, Mr. Anyalisi. We appreciate you for coming on board. Talk to us about yesterday's the bullish run that was recorded yesterday. Talk to us. What more do we have to know? Hello, Mr. Anyalisi. Can you hear me? Well, of course, having difficulties now, but let's get to look at some of the top trades for the week. I beg your pardon, yesterday's the gainers. Look at Wema Bank. Wema Bank, you have Wema Bank, UPL, Sunu Assurance, GlaxoSmithKline there among the top gainers there. And when, of course, we flip to the other side, Wema Tech in the red, losing 8.82% there. That's about 3 kobo at the end of yesterday. Prestige, MC Nichols lost about almost 8%. That's about 5 kobo yesterday. Cornerstone Insurance lost about 7 kobo. Wapik Insurance lost 4 kobo. In the red there. So, Isaac, we have you online now. Thank you so much for joining us. Talk to us. I was asking you the kind of sentiment that has been recorded in the market so far. Yesterday, again, we had another bullish run in the market. Talk to us. What are the factors responsible here?
We saw the all-share index yesterday, move by 0.21% to 65,336.80 points. Okay, on a year-to-date gain of 27.48%. Similarly, the market capitalization also closed at 35.56 trillion. Okay, which gave us a year-to-date gain of about 27.37% approximately. All right, with the number of deals also inching forward by 4.5%. So even though you had the volume, dropping by 7.93% and the value dropping 35.92%, we can see that the market ended up on a bullish note. And of course, we expected that will happen, considering the fact that some of the
Hello, Mr. Anyalisi, can you hear me?
in order to take advantage of all of that. So that is the situation that you saw playing out. Particularly the economic policies of the new regime. For example, the unification of the exchange rate, which has given more powers for business dealings in forex back to the commercial banks, and you also have the adjustment, the upward tweak of the monetary policy rate, which also means that banks will be able to attract higher yields or higher interest rates on their borrowings. So you can see the banking sector moving forward. Like yesterday, the banking sector did about 0.81%, okay, followed by the oil sector, another sector that is positively affected by the government policy via the removal of subsidies, doing 0.12%. So some of the government policy direction.
Hello, Mr. Anyalisi, can you hear me? Hello, Mr. Anyalisi. We were having difficulties with Isaac Anyalisi trying to give us an update in the market. Okay, yes, please go ahead. Oh dear. Can you hear me, Mr. Anyalisi? Well, it looks like we're having a difficult time with Mr. Anyalisi there, but I hope that we can get this through. A bit of a.
I can hear you.
Okay, all right. So please go ahead. We lost connection with you earlier. Oh dear. I guess we just have to, perhaps when we can connect back to Mr. Anyalisi, we'll bring him back again. But on this note, we just have to take a break now. And when we return from this break, here are some of the things to expect now after this break. Of course, we focus attention on the future of transportation in Nigeria, from PMS to CNG. What's in need for transportation? Well, that's our next talking point when we return from this break. Please stay with us.